Kev. Stock's up nearly 20% so far this year, up over 100% over the last 12 months. It's pulled back 14% over the last just over a week here. So some weakness going into this, but the bar's still set pretty high on this one. Implied volatility levels elevated.
It's not up 100%, Tom. 98.3%. Come on, get it right.
I think you've got the wrong data, 102.
Yeah. So anyway, this thing has had an incredible run, and the bar is set incredibly high. Now, this stock, here's the thing, Tom. Is it Palo Alto Networks or is it Zscaler? Right? One went down after earnings, one went up after earnings, and their annual recurring revenue, their AAR, they're going to focus on that. They're going to focus on free cash flow, and then we're going to compare. And then you're going to look and find out which one they are. So, this is. I'm not an expert on cybersecurity, but you watch these names and you read about them, and this one seems to be more in the Zscaler crowd than the Palo Alto Networks.
Yeah, and they've outperformed both of those names, those competitor spaces. KG, when you look at this, their subscription-based model generating more than 70% of their recurring revenues that Kevin mentioned, higher margins in that model. Their Falcon 10 cloud platform is supposed to be the leader in the space, but as I mentioned before, the bar's pretty high on this one, and we've seen some stocks this earnings season with a high bar get hammered, even though maybe they beat on EPS, beat on revenue. They say anything about guidance lighter than expected, the one that the street wants, we could easily see this stock down.
Yeah, and I think that's going to be the big risk here. Now, you kind of brought up Zscaler. I think this bar is fairly low for Zscaler, even though when they kind of provided their results and the guidance moving forward, it was better than the street's expectations. But I think the street was looking for a similar type of report that we saw from Palo Alto Networks. And I think that could probably still be the case here for Crowdstrike, even though the stock has pulled back a little bit. The subscription model it gives them a little bit of flexibility, for this particular quarter. But I'm going to be looking at that backlog of orders that are coming in the next year to 16 months, and I think that's going to be kind of that big risk. If that does come in light, the market could actually sell the stock off. Also, if you're kind of looking at a one-year daily chart, there's another area of concern that I'm kind of focusing on here. You talked about that pullback, but also there's an area of around $280 where we kind of tested several different times, and it appears that we're kind of on that trajectory to kind of hit that level again. And then also looking at that MACD with that 12 EMA below that 26 EMA and that bearish type of cross, not below the zero line yet, but getting fairly close. It appears that the technicals are kind of signaling that if we do have a bad report, we do have bad guidance, a gap can occur, and we could actually see a pretty significant gap to the downside here. And that's a little bit more concerning than potentially an upside move and have them bucking the trend that a lot of these technology companies, cybersecurity companies have been able to, that were not able to do that during this earnings season.
Yeah, broken through that 50-day moving average a few sessions ago. Maybe that acts as resistance at this point. But Kev, option market price